Hello viewers, welcome to my channel. I'm Hasham. So in this video, I'm going to explain you the remaining part of consignment accounts. In the last video, I have explained you the meaning of consignment, differences between sales and consignment, differences between Proforma invoice and account sales, and what is the accounting treatment in the books of the consignor. So what are the accounts that will be prepared by consignor? What are the journal entries to be passed in the books of the consignor? All these things I've explained in the previous video. And this video is the continuation of the last one. So if you join now, you may not be able to understand. So if you want the complete knowledge, I suggest you to watch the first video first. So go to the playlist of my channel. Select the subject Financial Accounting 2. In that subject, you will find the video of Consignment Account. Select the first video, watch the first video completely, then you join now. It will be very much helpful to you. You can easily get the good command on the subject, on the topic of consignment accounts. So, after completing the journal entries in the books of the consignor, now I am showing the ledger accounts in the books of the consignor. Normally, consignor will prepare 4 accounts. Consignment account, goods sent on consignment account, consignee account, and consignment stock account. So what are the items that may come on debit and credit side of consignment account? Here I am showing this is the consignment account. This is the format of consignment account. It's a ledger account, so it's a nominal account. All expenses debited, all incomes credited. The balance may be profit or it may be loss. So credit side by consignee's account. Credit side by consignee's account for sale proceeds. At what price the consignee has sold the goods? Sale proceeds. By consignment stock account. The goods which are remaining unsold with the consignee. Value of consignment stock we have to find out. I'll explain you. So these 2 items on the credit side. Debit side, goods sent on consignment. What is the cost of the goods sent on consignment? Then expenses paid by the consignor. Expenses paid by the consignee and commission due to the consignee. These are the normal items which will come on the debit side of consignment account. Again, debit side, goods sent on consignment, expenses paid by consignor, expenses paid by consignee, commission due to consignee. On credit side, consignee's account for sale proceeds and consignment stock account. Now after completing this consignment account, take the total on the credit side and take the total on the debit side. If credit side is more, and normally credit side will be more normally, not every time. So if credit side is more, the balancing figure is the profit and it will be transferred to profit and loss account. So to profit and loss account, balancing figure, this is the profit. Suppose in some problem you will find debit side more and credit side less. The balancing figure you are going to get on the credit side, that is a loss. That is a loss. So credit side by profit and loss account, balancing figure loss. If loss comes, that's it. Now what is the format of consignee account? Consignee account is the personal account which is opened by the consignor. So in order to find out how much is the amount due from consignee, how much amount is due from consignee. So consignee's account will be debited with sale proceeds. Debited with sale proceed. So debit side to consignment, sale proceed. Credit side will credit the amount he has advanced. Suppose in some problems, consignee will send some advance amount to the consignor. So if advance is given, then by bank or bills receivable, advance, consignment expenses. Whatever expenses consignee has paid, credit side, commission, credit side, then bank, balancing figure. That means what is the balance amount due received from consignee. This is the format of consignee account. Goods sent on consignment account. First entry, very first entry was consignment account data to goods sent on consignment account. So goods sent on consignment is credited by consignment. Then later on at the end, the goods sent on consignment should be transferred to trading account. Should be transferred to trading account. So debit side to trading account. That means this account will be get closed. The goods sent on consignment account will get closed. So whatever credited goods sent on consignment account was credited, that amount will be taken on debit side trading account. That's all. Now last stock on consignment stock account. At the end of the year, when we are finding how much value of goods unsold with the consignment stock, the entry will be consignment stock account data to consignment account. Consignment stock account data are to consignment account. So consignment stock is debited to consignment. And this will be carried down, brought down, because this balance will go to balance sheet. In the balance sheet, we have to represent the stock with the consignor, with the consignee, stock with the consignee. So by balance carried down, balancing figure, to balance brought down. So consignment stock account will show balance, whereas consignment account will get closed. Consignee account will pay the amount, will pay the final amount, and his account is closed. If he has not paid the final amount, some amount will be due. Then goods sent on consignment, every time it will be closed by transferring to trading account. And here consignment stock will show balance. The balance brought down. That's all. So I have completed all the accounting treatment in the books of the consignor. Now I am going to explain you about the consignee. What is the accounting treatment in the books of the consignee? First of all, when the consignee is selling the goods on behalf of consignor, he is not bothered about the profit or loss on consignment. Suppose A is the consignor, B is the consignee. A is sending the goods to B. So B is not at all bothered how much is the profit on consignment. He is bothered only in getting his commission. The consignee is working for getting his commission. He is not bothered about the profit or loss. So that's why consignee will not open consignment account. He will not maintain consignment account. He will not maintain goods sent on consignment account. The consignee is bothered only with his commission. So he will open only one account. That is consignor's account. That is consignor's account. So in the books of the consignee, only one account he will maintain. The account is consignor account. In our example, A is the consignor, B is the consignee. So B will open only one account, A's account. In the books of B, he will open only one account. Whose account? A's account. Why he is maintaining A's account? To find out how much is the amount payable to A. How much is the final amount payable to A. For that purpose, he is maintaining A's account, consignor's account. So first of all, journal entries in the books of the consignee. See here, when the consignee receives the goods, he won't pass any entry. When the consignee receives the goods from the consignor, as soon as he receives the entry, as soon as he receives the goods, he will not pass any entry. Similarly, when expenses are paid by the consignor, he will not pass any entry. He is not at all bothered. Because the goods does not belong to him. The goods belongs to the consignor. He is just receiving the goods. So he will not pass. Similarly, expenses paid by the consignor, no entry will be passed by the consignee. Advance given. Suppose some advance is paid by consignee to consignor, then he will pass the entry. What is that entry? For advance given by consignee to consignor, consignor account data to bank or bills payable. Suppose he is issuing a check or draft, so entry will be consignor account data to bank. Sometimes he will accept a bill which is drawn by the consignor. Consignor has drawn a bill of exchange on consignee and consignee has accepted that bill. Then to bills payable. Consignor account data to bills payable. If there is a bill, bills payable. If there is no bill but check or draft, will take bank. Next, for expenses incurred by consignee. After receiving the goods, some expenses will be paid by the consignee. So actually, the expenses should be borne by the consignor. The goods belongs to consignor. So all expenses should be borne by consignor only. But here consignee from his own pocket, he has paid the expenses. So entry will be consignor account data to bank. The entry will be consignor account data to bank for expenses paid by consignee. Similarly for the sales made by consignee. When the goods are sold, cash is received. So bank account will be debited. The consignee has sold the goods and consignee has received the cash. He will debit bank. So bank account data too. But this cash belongs to the consignor. The cash which he receives does not belong to the consignee. This cash belongs to the consignor. So entry will be bank account data to consignor account. Bank account data to consignor account. For commission receivable. Now consignee is getting the commission. Commission is an income. Commission is an income. So commission account is credited. From whom commission is receivable? From consignor. So entry will be consignor account data to commission account. Consignor account data to commission. For final remittance to consignor, finally the amount is paid to the consignor. So entry consignor account data to bank or consignor account data to bills payable. If there is a bill of exchange, to bills payable. If there is cash or draft paid, to bank. That's it. Only few entries are passed in the books of the consignee. So consignee is not bothered. Now what is the how the consignor account looks like in the books of consignee? I am showing a format. So consignor's account. This consignor's account is opened by the consignee in the books of consignee. So how it looks like? By bank, sale proceeds. Consignor's account is credited by bank, sale proceeds. Consignor's account is debited to bank or bills payable for advance money given, to bank expenses paid, to commission, then to bank or bills payable final amount paid. This is the structure, format of consignor account in the books of the consignee. Now in the books of consignee, no entries will be made for the following. Some 5 items are there. I have given these items, no entry will be passed in the books of the consignee. What are the entries regarding for receiving the goods? When the consignee receives the goods, he will not pass any entry. First thing. Second, expenses of consignor. When consignor pays some expenses, no entry in the books of the consignee. Similarly, discounting of bill by the consignor. Suppose the consignor has drawn the bill on the consignee. Consignee accepted the bill and returned the bill back to the consignor. Now consignor has discounted the bill. When the consignor is discounting the bill, no entry in the books of the consignee. Next one, consignment stock. So at the end of the year, when we are closing the accounts, if there is consignment stock on hand, this consignment stock entry will be passed only by the consignor. No entry in the books of the consignee. Last one, profit or loss on consignment. He is not bothered. The consignee is not bothered how much is the profit or loss. He is working only for commission. So for these items, no entry will be passed in the books of the consignee. That's it. Over. So I have explained you the accounting treatment in the books of the consignor, in the books of the consignee. If you want the complete grip on this topic of consignment account, watch these journal entries not once, twice, thrice, 3-4 times. If you watch, you can be able to remember the entries, and while doing the problem, you will not face any problem. Easily you can understand the problems if you are perfect on the journal entries on this lecture. Now, types of commission. When the consignee is working for commission, there are 3 types of commission. Commission is the remuneration which the consignee is getting for his efforts, because he is doing the work on behalf of the consignor. He is doing the work on behalf of the consignor, so he is getting commission. So 3 types of commission are there. First, ordinary commission. Ordinary commission is the normal commission which is calculated as a percentage on sales. For example, A is the consignor, B is the consignee. A sales, I will pay you 10% commission on sales. So whatever sales conducted by B, on that 10% is the commission which is payable by A to B. That is called ordinary commission, normal commission. Second is del creditor commission. Del creditor commission is the extra commission apart from normal commission. Apart from normal commission, some extra commission will be paid by the consignor to the consignee for bearing the risk of bad debts. For bearing the risk of bad debts. Suppose, if the consignee sells the goods on credit, on the instruction of the consignor, A says to B that you can sell the goods on cash and also you can sell the goods on credit. So B has sold the goods on credit. But later on, one of the customer has not paid the amount. It is a bad debt. So who has to bear the bad debts? Owner has to bear the bad debts. That means the consignor has to bear the bad debts. Consignor. Because on the instruction of consignor only, consignee has sold the goods on credit. So bad debt is a loss which should be borne by the consignor. But sometimes the consignor will say to the consignee, I will give you extra commission. then bad debts, if there are any bad debt, you must bear yourself. I will not bear the bad debts. So by giving some extra commission to the consignee, now the loss of bad debts will be borne by the consignor. The bad debt is the loss of the consignee if he is getting del credar commission. Example, A says to B, I will give you 10% normal commission. Apart from that, I will give you 5% del credar commission, but any bad debt arise, you have to bear yourself. I am not going to bear. This is called del credar commission. Del credar commission is also calculated on total sales. Now, overriding commission. Sometimes extra commission will be given by the consignor to consignee for promoting a new product, or for putting extra efforts in selling the goods, or if the consignee puts extra effort in selling at a higher price, then special commission given by the consignor to the consignee for promoting a new product, or for promoting sale, for promoting a new product, or for selling the goods at a higher price. In that case, special commission will be given called overriding commission. So apart from normal commission, a consignor may give del credar commission, a consignor may give overriding commission, extra commission for special efforts put by the consignee. These are the three types. This will be asked in theory question in examination regarding this commission. Now, valuation of consignment stock. One of the difficult topic is valuing the consignment stock. The stock which is remaining unsold with the consignee has to be calculated its value. Only cost will not be taken, but proportionate expenses will also be included in the cost of stock, in the value of the stock. Example, the cost of the stock, the cost of the goods sent is 1 lakh rupees. The cost of the total goods sent by the consignor to the consignee is 1 lakh. And suppose 20% of goods are remaining unsold. So 1 lakh, 20%, it will be 20,000. The cost of the goods unsold is 20,000. But apart from that, the direct expenses, non-recurring expenses should also be included in the value of the unsold stock. So how to find out the value of the non-recurring expenses? Here you have to remember what are the rules. So here the cost of consignment stock should include the proportionate. Proportionate means part, not complete. The non-recurring expenses, the total non-recurring expense should not be included, only proportionate. Like 20% goods are unsold, so 20% of non-recurring expenses should be included in the unsold stock. So proportionate, non-recurring or direct expenses paid by the consignor or consignee. Whether direct expenses are paid by the consignor or the direct expense paid by the consignee, that proportionate direct expenses will be included in the value of unsold stock. Now, examples. Actually, what do you mean by non-recurring expenses or direct expenses? The direct expense may be incurred by the consignor or it may be incurred by the consignee. So first of all, you must know what is direct expense. All the expenses which are incurred by sending the goods from the place of consignor to the place of the consignee. All expenses incurred by sending the goods from the place of consignor to the place of the consignee. That is called recurring expenses. That is called recurring. The examples of all the expenses which are incurred are freight. Remember this point. Freight, packing, carriage or cartage, insurance on goods sent, dock dues, loading and unloading charges, import or customs duty, octroi, carriage paid by the consignee to move the goods to the godown. So these are the examples of non-recurring expenses. Only once it will be done. That's why the name is non-recurring. Only once it will be incurred to move the goods from the place of consignor to the place of the consignee. These are the examples. And proportionate amount of these expenses will be included in the value of unsold stock. Now the question arises, what are recurring expenses? These are non-recurring. Proportionate non-recurring expense should be included. Then which should be excluded? Which expense should not be included? Those are recurring expenses. Recurring expenses are those which are incurred after the goods have reached the place of consignee. When the goods have reached the place of consignee, after reaching the place of consignee, any expenses incurred by the consignee are called recurring expenses. Normally it is selling expenses. Normally it is selling expenses. Then example are go down rent. The consignee has taken a go down on rent. The rent is paid by the consignee for the go down. So this is after reaching the goods. So it is recurring expense. This go down rent should not be considered while calculating value of unsold stock. Similarly, insurance of go down, advertising, salary of salesmen, carriage on sales. Remember, these items should not be taken into consideration while calculating the value of unsold stock because these are recurring expenses. These expenses are incurred after reaching the goods to the place of the consignee. These are recurring expenses, selling expenses, right? Now, note, if details are not given, sometimes while doing the problem, all the details regarding expenses incurred by the consignor, expense incurred by the consignee, details are not given, then we'll make the assumption. All expenses incurred by the consignor are direct only, are direct expenses, whereas expenses incurred by the consignee, we assume it is indirect, it is recurring, so we will not consider. So consignee's expenses should be ignored. Consignor expenses should be included while calculating the value of unsold stock if the details are not given. That's it. The last topic is invoice price. The goods may be sent by the consignor to the consignee either at cost price or at invoice price. What is this invoice price? Sometimes the consignor don't want to disclose all the details to the consignee because the details are secret of the business. A and B, A is the consignor, B is the consignee. A says to himself that if I disclose all my detail to the consignee, then consignee can be able to know the secrets of my business, how much profit I am earning from consignment. All these things will be known to the consignee. So in order to protect his business, in order to not to tell the details of consignment profit to the consignee, the consignor will send the goods at invoice price. I am the consignor. Suppose you are the consignee. I don't want to disclose all my details to you. That means I don't want to disclose how much profit I am earning from consignment to you. So when I send the goods to you, I will show that I am sending the goods at invoice price. Then you don't know what is the actual cost price. Actually, I have purchased the goods for 1 lakh. I am putting some loading in that. Loading is let it be 20%, 20,000. So 1,20,000 is the invoice price. 1 lakh rupees cost price. 20,000 rupees I have included. I told invoice price is 120. So this 1,20,000 rupees is the invoice price at which I am sending the goods to the consignee. Now the consignee is in blank. He doesn't know that it 1,20,000 is the invoice price. In that invoice price, what is the cost and how much profit? He's in blank. He doesn't know. So goods are sent at invoice price. If the goods are sent at invoice price, then 2 additional adjustment entries will be passed by the consignor. So consignor will pass 2 adjustment entries if goods are sent at invoice price. What are the adjustment entries? First, goods sent on consignment account data to consignment account. Goods sent on consignment account data to consignment account. For the difference between the invoice price and the cost price of the total goods. On the total goods, what is the difference between invoice price and cost price? Actually, the consignor has sent the goods, the cost price 1 lakh, invoice price 1,20,000. The difference is 20,000. For that 20,000, we pass the entry, goods sent on consignment account data to consignment account. Next one is consignment account data to consignment stock reserve. Consignment account data to consignment stock reserve. For the difference between the invoice price and cost price of stock remaining unsold. How much is the stock remaining unsold? We find out what is the cost price of stock, what is the invoice price of stock. The difference between the cost price of stock and invoice price of stock, we pass this entry, consignment account data to consignment stock reserve. Remember, these 2 adjustment entries are required only if goods are sent at invoice price. Otherwise, these two entries will not be passed. The difference between invoice price and cost price of the goods sent on consignment is called loading. The difference between invoice price and cost price, whether in the total goods sent or whether in the stock, it is called loading. Difference in invoice price and cost price is called loading. So in consignment, two types of losses may arise. That is normal loss and abnormal loss. Now I am going to explain you finally, this is the last topic, normal loss and abnormal loss, how to make the treatment. I am going to explain. So normal loss means expected loss. Due to inherent nature of the commodity, due to the nature of the goods, there may be some loss. For example, 100 kilograms of particular commodity is sent by the consignor to the consignee. But according to the experience, past experience, we can say 10% of the goods will be lost in transit. 10% of the goods will be lost while loading or unloading, like that. So 100 units are sent, so 10% of 100 is 10 units. 10 units will be normally lost. I know it because I am the consignor and I know it according to my past experience. Then when I send 100 units of goods to the consignee can be able to sell only 90. Because during the transit or unloading, loading, at that time, some goods may be lost. Expected loss is called normal loss. Expected loss due to the inherent nature of the goods. Example of such losses are due to loading or unloading of goods, evaporation, drying up, cutting the bulk into smaller parts, like that. On account of these reasons, some loss is inherent. It is inevitable. So this type of loss is called normal loss. No entry as such is passed in the books of the consignor and consignee for such loss. If expected loss, normal loss is there, no entry is required in the books of the consignor and consignee. But it has to be considered while calculating the value of unsold stock. But such loss is considered while valuing unsold stock. So when we are calculating the value of unsold stock, this should be considered, but no separate entry should be passed for normal loss. That's it. Now what is abnormal loss and how it is treated? Now I am going to explain you. Abnormal loss, that means the loss which is expected, that is unexpected. This normal loss is expected loss. The unexpected loss, that means if the consignor has taken some steps, then this loss may not have arisen. So abnormal loss is that loss which is avoidable, which can be avoided and which does not arise due to the nature of the goods. The loss is not dependent on the nature of the goods. It has arisen due to the negligence or not taken care of by the consignor. The consignor can avoid that loss, but in spite of that, the loss has occurred. The example of such abnormal losses are fire or theft, pilferage, etc. This loss can be avoided by taking an insurance policy. By taking an insurance policy, the loss due to fire, the loss due to theft, pilferage, this type of losses can be avoided. Avoidable loss. This is unavoidable. Normal loss is unavoidable, whereas abnormal loss are avoidable if the consignor has taken some steps. The value of abnormal loss is calculated in the same way as the value of unsold goods. Just now I have explained you how to calculate the value of unsold stock. That means proportionate non-recurring expenses should also be included in the value of unsold stock. Similarly, proportionate value of non-recurring expense should also be included while valuing abnormal loss. The value of abnormal loss will be calculated in the same way as the value of stock. But the following entries are passed in the books of the consignor. Only in the books of consignor entry will be required for abnormal loss. The two entries are, first one, abnormal loss account data to consignment account. First we calculate the value of the abnormal loss in working note. Suppose the value of abnormal loss is 5,000. So entry will be abnormal loss account data to consignment, 5,000 being the value of abnormal loss. Now suppose it is insured. An insurance company has agreed to pay 4,000. 4,000 rupees insurance company has agreed to pay. So entry will be insurance company account data to abnormal loss. How much? 4,000. So actually abnormal loss was debited by 5,000. Here abnormal loss is credited by 4,000. 1,000 still abnormal loss is there. that will be transferred to profit and loss account. The balance left in abnormal loss account is closed by transferring it to profit and loss account. That's all. So these are the entries to be passed if there is abnormal loss in the books of the consignor. That's it. So this is the complete theory I have explained on consignment accounts. In the first video, I have explained you the meaning of term consignment, differences between sales and consignment, and what are the differences between proforma invoice and account sales, and accounting treatment. What are the journal entries to be passed in the books of consignor? What are the ledger accounts to be passed in the books of the consignor? Then journal entries and ledger accounts in the books of the consignee. Then I have explained about the different types of losses. Not losses, but commission. Different types of commission. Normal commission, del creditor commission, then overriding commission I have explained. Apart from that, I have explained about the valuation of consignment stock. How to calculate the value of unsold stock. Then I have explained you about the invoice price. When the goods are sent at invoice price, what are the additional entries to be passed. Lastly, I have explained you about normal loss and abnormal loss. This is the complete explanation of this consignment accounts. The problems are based on this theory which I have explained. So I suggest you, if my genuine viewers, if my students wants to get a complete command, good command on this topic, watch this theory video not once, twice, thrice. Then you watch the video, definitely you can gain a lot of knowledge, lot of confidence on the topic of consignment account. So I'm concluding this lecture expecting that if you are satisfied with my lecture, if you think that these lectures are increasing your knowledge, it's beneficial for you, then give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. So next video I'm going to start, inshallah, I'm going to start the problems on consignment accounts.